Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us solve the example of company's final account. This example was asked in SPPU examination December 2023. Total this example was asked for 20 marks. Shivansh Company Limited, Pune was registered with an authorized capital of 10 lakh divided into 10,000 equity shares of rupees 10 each. The following is the trial balance of the company as on 31st March 2023. So this is the trial balance of Shivansh Company Limited as on 31st March 2023. So stock is given 1,20,000, plant and machinery 6 lakh, furnitures and fixtures 3 lakhs, purchases 7,70,000, sales return 10,000, salary 30,000, wages 70,000, bills debtors sundry debtors 80,000, bills receivables 40,000, cash in hand 1,07,000, cash at bank 1 lakh, bank interest 12,000, interest on 6% debentures 18,000, audit fees 8,000, rent, rate and taxes 10,000, general expenses 5,000, goodwill 10,000. Then to the credit side, share capital is given 5,000 equity shares of 100 each fully paid 5 lakh rupees, journal reserves 1 lakh, 6% debentures 3 lakhs, sundry creditors 50,000, sales 12 lakhs, purchase return 20,000, bills payable 30,000, profit and loss account for or as on 1st April 2022, this is the last year profit, that is 80,000, rent received 10,000. Along with this trial balance there are some additional information provided. It is first is stock as on 31st March 2023. This is the closing stock. So the closing stock is 90,000. Then depreciation is to be charged on plant and machinery and furnitures 5% and 10% respectively. Outstanding salary 50,000 and rent paid in advance 3,000. Outstanding salary is 5,000. Rent paid in advance 3,000. Provide 5% RDD on sundry debtors. Then transfer 5,000 for general reserve. Okay. Now we have note is there, we have to prepare only required working notes, and what we have to do, you are required to prepare balance sheet and statement of profit and loss for the year ended 31st March 2023 as per Companies Act 2013 Schedule 3. Okay, so this is the example. How now we will solve this example. First of all, you have to prepare the balance sheet format as per the Companies Act 2013. Then we have to prepare the statement of profit and loss account for the year ended 31st March 2023 as per Companies Act 2013. Okay, now in my last lecture I have explained you that what is the format of balance sheet, then the format of profit and loss account. Okay, along with those format I have given you the working notes also, the heading of the working note. Under that working note, what are the particulars or item comes under the working note. Okay, so in my last lecture I have explained you, the link I will share in the description box. Okay, now first what we will do, we will mark all the adjustment. Okay, so we have adjustment on plant and machinery, furnitures, then salaries. Okay, then we have adjustment on sundry debtors, then adjustment on journal reserves. Okay, now there is purchase and purchase return, this we have to less. Okay, then sales and sale return is there, with that we have to do the we have to reduce from the sales. Okay, now first we'll do all the marking that in which account or in which working note this particular item goes. So stock, it will go in working note number 31. Okay, so this working note, as per my notes which I have shared in my first lecture, in the first video of the company's final account, in that I have prepared the working note. So that working note number I am taking uh, to solve this example. Okay, so stock will go in working note number 31. Then plant and machinery note number 10, furnitures note number 10, purchase note number 30, sales return note number 27, salary note number 32, wages note number 32, that is employee benefit expenses, sundry debtors note number 18, trade receivables, bills receivable also note number 18, cash in hand and cash at back, this both will go in note number 24. Bank interest, interest on 6% debentures, this both entries will go in note number 33. The heading of note number 33 is finance cost. Audit fees, we have adjustment on rent rate and taxes also. See, rent is paid advance 3%. So all this audit fees, rent, and journal expenses, these three entries will go in note number 35. The heading of note number 35 is other expenses. Goodwill will go in note number 13. Then share capital note number 1, authorized capital is also there, this will also go in note number 1. Then journal reserve note number 2, 6% debentures note number 3, long term borrowings, sundry creditors and bills, sundry creditors note number 7, sales note number 27, purchase return note number 30. From the purchase we have to less the purchase return. Bills payable note number 7. Profit and loss of the last year, profit of the last year note number 2. Rent received, this is other income note number 28, that stands for note number other income. Okay, now we have marked all the entries that in which working note this particulars or items will go. Now we will solve the example. Okay, now see, you have to first prepare the balance sheet of Shivansh Company Limited as on 31st March 2023 and profit and loss account. Okay, so this is the balance sheet and profit and loss account as per the Companies Act 2013. Okay, so this is in the format of vertical format. Okay, now whatever entries we are going to do, we are going to pass all these entries particularly in the working note, and then the final total we are going to write in the profit and loss and in the balance sheet. Okay, now first entry we will write of authorized capital. How much is the authorized capital? 10 lakh. Okay, 10 lakh is the authorized capital. Okay, this authorized capital we cannot take for the calculation. After writing the authorized capital, first is stock. How much is the stock? The note number is 31. Stock value is 1,20,000. From this stock we have to less the closing stock. Okay, the closing stock is 90,000. close stock year. In working note number 31, opening stock, write it in the inner column. Opening stock is 1,20,000. From there, less closing stock 90,000. The final value is 30,000. Okay. Now the second effect of closing stock will come in note number 22. Note number 22, closing stock 90,000. Okay. For the adjustment, I have not discussed the second effect and where this entry will come. Now opening stock, closing stock 31st March 2023, 90,000. First effect will come in note number 31 and second effect in note number 22. Plant and machinery and furnitures, first effect note number 10, second effect in note number 34. Outstanding salary, first effect in note number 32, second effect note number 8. Then rent paid in advance 3,000, first effect in note number 35, second effect in note number 25. The heading of note number 25 is short term loans and advances. Sundry debtors, note number 18, first effect, second effect in note number 35. Journal reserves, transfer to journal reserve, both the effect will be in the note number 2 only. First we have to add in journal reserve and second effect we have to less from the profit and loss account. Okay. Okay. So second effect of closing stock we have done. Next, plant and machinery. Plant and machinery 6 lakhs. Furnitures 3 lakhs. Now what is the depreciation? Plant and machinery 5% and 10% on furnitures. 6 lakh is plant and machinery and furnitures is 3 lakhs. Okay. So note number 10. Note number 10. Plant and machinery is 6 lakh. On 6 lakh there is 5% depreciation. 30,000 is the depreciation. Then 6 lakh minus 30,000, 5 lakh 70,000 is the balance remaining. Then furnitures 3 lakhs. On 3 lakhs 10% is the depreciation. So depreciation we get 30,000. 3 lakh minus 30,000, 2 lakh 70,000. Now second effect will come in the depreciation. Second effect will come in note number 34. Note number 34, that is plant and depreciation and amortization expenses. So depreciation for plant and machinery at 5% is 30,000 and furniture 10%, 30,000. Okay, so second effect we have posted in the respective working note. Next, after depreciation, purchase. Purchase is 7,70,000. From this purchase, the note is 30. From this purchase, we have to less the purchase return also. Purchase return is 20,000. Purchase, total purchase is 7,70,000. From 7,70,000 less the purchase return. Purchase return is 20,000. In the outer column 7,50,000 will be the remaining balance. Okay, now this purchase return will not have the second effect. It is only one effect, purchase, from purchase less the purchase return. After that, sales return is there, 10,000. Now sales is note number is 27, that is revenue from operation. So sales, total sales is 12 lakh rupees. From 12 lakh rupees we have to less 10,000. So note number 27, note number 27 sales, note number 27 revenue from operation. Sales, total sales is 12 lakhs. From 12 lakh less the sales return, that is 10,000, remaining 11 lakh 90,000. After that, salary and wages. On salary we have outstanding, that is 5%. Both the entry will come in note number 32. Note number 32, salaries, total salary is 30,000, add 5,000, 30,000 plus 5,000, total salary is 35,000. Wages, amount of wages is 70,000. Now second effect of outstanding salary will come in note number 8. Outstanding salaries in other current liabilities, 5,000. Wages entry 70,000 we have did. Then sundry debtors and bills receivable, note number 18. Sundry debtors are 80,000, bills receivables are 40,000. Then on sundry debtors there is 5% of RDD, okay, provision. So sundry debtors 80,000, bills receivable 40,000. Both the note will come in 18, note number 18. So sundry debtors, total sundry debtors are 80,000. Then provide 5% RDD, 5% on 80,000, 4,000. So 80,000 minus 4,000, 76,000 is the balance. Now the second effect of RDD, that is 4,000, we have to give in the note number 35, that is other expenses. So RDD, write in the particulars, RDD 4,000. Then bills receivable 40,000. Okay, after bills receivables we have cash in hand and cash at bank. Both the entry will come in note number 24, that is cash and cash equivalent. Cash in hand 1,07,000 and cash at bank 1 lakh rupees. Note number 24, cash and cash equivalent, cash in hand, cash at bank 1,07,000 and cash at bank 1 lakh. After cash in hand and cash at bank, next is bank interest 12,000, interest on 6% debentures 18,000. Both this entry will come in note number 33, that is finance cost. Note number 33, finance cost, bank interest 12,000, interest on 6% debentures 18,000. Next, audit fees, rent, rate and taxes and journal expenses. All these three entries will come in note number 35. Audit fees 8,000, rent, rate and taxes 10,000, journal expenses 5,000. On rent we have adjustment of 3,000 rupees. Note number 35, audit fees 8,000, journal expenses 5,000, Now rent, rate and taxes total is 10,000. From this 10,000 we have paid the rent in advance rupees 30,000. So rupees 3,000 less it from the 10,000. So balance is 7,000. The second effect of excuse me, the second effect of 3,000, that is rent paid in advance, will come in note number 25. That is short term loans and advances, rent paid in advance 3,000. Next is goodwill. Goodwill note number 13. Goodwill is rupees 10,000. Note number 13. Goodwill 10,000. After that, share capital note number 1. Rupees 5 lakhs is the share capital, equity paid up capital. Okay. So note number 1, 5 lakhs. After that, journal reserve note number 2, 1 lakh. Okay. Then in this we have adjustment that we have to transfer 5,000 to journal reserve. So note number 2, in journal reserve write 1 lakh rupees, add transfer to journal 5,000. Okay, first effect. The second effect, from this opening balance, that is last year balance, less transfer to journal reserve 5,000. Okay, both the effect of transfer to journal reserve will be in note number 2 only. If first we have to add in journal reserve, and second effect we have to less in the current year profit and last year profit. Then next is 6% debentures, note number 3, rupees 3 lakhs. Note number 3, long term borrowing 6% debentures, rupees 3 lakh. After that, sundry creditors, bills payable note number 7, sundry creditors note number 50, note number 7, amount is 50,000, bills payable note number 7, amount is 30,000. Bills payable 30,000. Sales we have did, purchase return we have did, bills payable we have did, profit and loss note number 2, that is 80,000, and rent received note number 28, 10,000. Profit and loss, this profit is of last year profit 80,000, and rent received other income 10,000, we have received the rent. So now all the entries along with the second effect we have passed in the particular working note. So now we will close this working notes. First close the working note number 1, that is share capital. First we will close the working note of profit and loss account, so that easily we can find the current year profit. So from revenue from operation, the total balance is 11 lakh 90,000. Then other income 10,000. Purchase 7 lakh 50,000. Note number 31, change in inventory 30,000. Note number 32, employee benefit expenses 1 lakh 5,000. Note number 34, depreciation 60,000. Then note number 33, 12,000 plus 18,000, 30,000. Other expenses total 24,000. Then note number 10, 84,000. Sorry, 8 lakhs 40,000. Goodwill 10,000. Outstanding salary 5,000. Trade payable 80,000. Closing stock 90,000 total. Cash in hand and cash at bank total 2,07,000. 3,000 note number 25. Note number 18, 1,16,000. Note number 1, 5 lakh is the total. Okay, now we will after we get the current year profit, then we will close the note number 2. Debentures are remaining, note 3 lakhs. Okay. So now we will post all the total in the profit and loss account. First, this thing is there, revenue from operation. Revenue from operation, note number is what? Note number 27. The total of note number 27 is 1,19,000. And what is the heading of note number 27? Revenue from operation. So note number 27, revenue from operation 1,19,000. Sorry, 11,90,000. 11,90,000. Then next is other income. The heading of other income, note number 28, other income total is 10,000. 28, 10,000. Now then add the total income, that is 1 plus 2, that is 11,90,000 plus 10,000. We get 12 lakh as the total income. So total income is 12 lakh. From this total income we have to less the expenses. So purchase of stock in trade, note number 30, the total is 7,50,000. Note number 30, total is 7,50,000. After that, change in inventory, note number 31, the total is 30,000. Employee benefit expenses, note number 32, total is 1,05,000. 1,05,000. Then fixed finance cost, note number 33, total of note number 33 is 30,000. Then depreciation and amortization expenses, note number 34, total of note number 34 is 60,000. Other expenses, note number 35, total of other expenses is 24,000. Okay, now add all these expenses and write in the total expenses. The total will come 9,99,000. Okay, now you can observe that total income is less than total income. That means we have earned the profit. Income is more and expenses is less. So difference of income minus expenses is 2,01,000. Now write the same value. This is the current year profit. Current year profit is 2,01,000. Now this 2,01,000 we have to write in note number 2, that is reserves and surplus. Write in the, add this profit in the last year profit, that is 2,01,000. So 80,000. So add journal reserves 1,05,000. So we get 1,05,000. Then 80,000 plus 2,01,000 minus 5,000. The remaining balance is 2,76,000. Okay, now add this and close the working note number 2. So total we will get 3,81,000. Okay, now we have got the profit for the year. Now we will close the balance sheet. Liabilities and assets should get tally. Now first is share capital, note number 1. The total of share capital is 5 lakh rupees. Then reserves and surplus, note number 2. The total of reserves and surplus is 3,81,000. Then next is note number 3, long term borrowing. Total is 3 lakhs. Long term borrowing total is 3 lakh. After that we have trade payable, note number 7. Trade payable, note number 7. The total of trade payable is 80,000. Next, note number 8. Other current liabilities, total is 5,000. Add all the liabilities, 5 lakh plus 3 lakh 81,000 plus 3 lakhs plus 80,000 plus 5,000. The total liability we will get 12 lakh 66,000. Now we will pass all the entries of assets. Property, plant and equipment, note number 10. The total of note number 8 is 10 is 8 lakh 40,000. Next, goodwill, note number 13, 10,000. Next, note number 18, trade receivable. The total of note number 18 is 1,16,000. 1,16,000. After that, inventories, note number 22, 90,000. Then next is cash and cash equivalent, note number 24. and short term loans and advances, note number 25. Cash and cash equivalent total is 2,07,000. 2,07,000. Short term loans and advances, note number 25, 3,000. So now if we add all the assets, the total we will get 12,66,000. This means assets and liabilities both are getting tallied. Okay. So in this way we have to calculate, or we have to prepare the profit and loss account and balance sheet as per Companies Act 2023. Okay. I hope you have understood today's session. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.